almost 6 p.m. So you're right, we're a bit late, but let's start. Okay, so this is the PowerPoint presentation. I just want to start the slideshow. Cool. Great. So the US election 2020, how will it impact financial markets? We all want to know how it will affect us. If you are already investing or you have positions, you would like to know what kind of maybe hedges you can take in order to protect your portfolio, or maybe take advantage of some trading ideas, trading opportunity. The volatility has just been tremendously nice for, let's say, short-term trading, and so for example, today even gold prices are up. We predicted they would go up maybe yesterday, yes, actually on the 21st, and our target was reached right now, like maybe half an hour ago at 1930 an ounce. Gold is at now. So what other instruments can you take advantage of, and how to take advantage of all this chaos, let's call it, because it's really chaotic, I think, these elections. Okay, we all know that historically the US presidential election has always had a significant impact on financial markets. However, there are a few times in living memory where we have approached a US election with so much uncertainty. You know, the markets are so uncertain. Some analysts are predicting one thing, other analysts are predicting the total opposite. And so who do we believe, and what to do in order for us to be protected against, let's say, protected against volatility if you're a long-term trader, or to take advantage of this volatility if you're a short-term to medium-term trader? And well, add to those uncertainties President Trump's threats to challenge and dispute results, and the outcome is expected to be chaotic, right? Okay, weeks of market volatility. It's been volatile for a while, of course, because of stimulus changes. They keep changing their mind. The fights between the Democrats, the Republicans, coronavirus is not adding. Is adding to the instability and the uncertainty, with all the infections going through the roofs all over the world, restrictions coming back, unfortunately, lockdown, travel restrictions. We all thought it was getting better. However, unfortunately for all of us, I'm traveling tomorrow, and I just took the test yesterday, got the results, negative. But I have to upload it to a health ministry website, etc. So all these complications, Then you also, if it's a long flight, you have to wear these masks, and not very easy life, let's call it. It hasn't been an easy year. And now the election in the US, the most important economical, country in the world, let's call it. So if Trump challenges the results, or accuses the other party of fraudulent election, it will be really, really bad, I think, to the markets. So that's one of the scenarios we're going to look at. Okay, so what makes the markets vulnerable? First of all, as I said, Trump's threats to dispute results. If he does, sorry, I think I changed my screen. Again, the PowerPoint slide, sorry about that. So the threats to dispute results. As I said, if he does, because we all know that when Trump has been, saying things recently, he doesn't back off easy. So if he's threatening to dispute results in case of a Biden win, or in case of a Democratic sweep, then, or worse, in case there is a very narrow gap between voting in certain states called the swing states that make all the difference. Usually, we all know that there's 3 or 4 states that make usually the difference between Republicans and Democrats. And if there is a narrow win in the votes, in the number of votes, then it's going to be really chaotic for the markets. We would very much expect that if we don't have a concession speech right away, and you remember what happened in year 2000, when there was also a disputed vote in Florida, I believe, the state of Florida, between Al Gore and George W. Bush Jr. And if Al Gore hasn't, well, Al Gore took 5 weeks to give his concession speech, and the market really didn't crash, but the S&P plunged about 10%, the Nasdaq plunged maybe 20%, and if there is no concession speech either by the challenger or the incumbent, it will be very bad for the stock market, but would most probably send the prices of gold soaring. We're already witnessing prices of gold now going up because of the inflation threats, because of all the stimulus. And I believe if there is also disputed results in the elections next week, well, not next week, in 10 days, and in about 10 days, then the markets will plunge and the volatility will increase. So chaos and weeks of market volatility. The pandemic is adding to the turbulence, as we said, and stimulus before or after the election. And all these uncertainties are really adding to the uncertainties and to the market volatility. So the markets, let's say all the analysts now agree that the markets are pricing in a democratic sweep, right? So we would say that the markets are still up, considering even after yesterday's correction and today's actually correction, because now the market has been open in the US for a couple of hours and stocks are falling for the last 2 hours. So still, it's not really a big correction, right? We're still above moving averages. The highs are not very far away. The Dow Jones, for example, the previous high before the crash, the March crash, of course, was at 29,500 about, and then we dropped in March, 24th of March, around the end of March, to almost 18,000, so 9,000 points drop when the whole, Corona lockdowns and all that started. And then we bounced back pretty impressively. I would say the Dow Jones reached about 27,500, so only 2,000 points below all-time highs in June, the first week of June. And then not a long time ago, the 1st of September, like the first week of September, we reached 29,000. So we were only maybe 500 points away from all-time highs on the most famous benchmark, US benchmark. And we're not too far now, right? We're at maybe I would say 28,190. So that's not very bad, considering the impressive rally we witnessed after the with that actually Trump is taking a lot of credit and using as one of the strong positive things that he did during his 4 years term, right? The impressive stock market record highs, even in the worst recession that the US has ever seen since the Great Depression. So yes, Trump has the right to brag about that. And without or with the stimulus, traders are just pricing in the stimulus, right? Whether it's before the election or after the election, traders are just expecting, more money, more paychecks, etc. So, the time is not really impacting stocks a lot. Maybe that's what's driving gold prices higher as well. And the market's pricing, even though the market's pricing in a democratic sweep, I don't believe that if Trump wins, we will see either a big correction or a higher run-up, because I think, and we'll see that in other webinars, because this is a first episode of a series of webinars that I'll be hosting until election day, even after the elections, to see, to get some results, feedback, and if you guys have any questions later on, or if you maybe took some positions in the market and you would like my feedback on these positions as we evolve and as things change, because I expect things to change quite a lot as well before and after the elections. Let's say a couple of weeks after, before things start stabilizing again. I don't know. There's a question by Jonah, but I don't understand the questions. Guys, also you can ask the question in the chat. You don't have to ask the question in a private chat, so that everybody can read it, and I don't have to read it out loud. But can you repeat the question? By the time Jonah's typing, because he's typing now, so we will continue with the next slide. So, fact: since 1932, all U.S. presidents stayed 2 terms in office, 8 years in office. So no incumbent president has ever lost the elections, the second term elections. So another term in office, except there is an exception. How about now? Is that good? Okay, so 1981, I'm not sure if you heard me, 1981, Jimmy Carter lost the second term. So he did not win another term in the US presidency. Ronald Reagan back then took his place, and George H.W. Bush also was beaten by Bill Clinton. And in both cases, and these are the only cases in history, in recent history, since 1932, and in both cases, the US was going through a recession. So what does this tell us? This tells us that maybe Trump doesn't have a chance, right? Because the US is going through the worst economic crisis since the Great Depression. Okay, so who is likely to win then? There we go. I fixed it so that we don't lose, when I switch from slide to slide, we don't lose the camera. All right. So let us look at who's likely to win. Okay, so an incumbent president has never failed to win re-election. So does that mean that Trump is going to lose? Because the 2 exceptions, as we said, is only when there was a recession. Now, the Squared Financial Markets Insights team, because we discuss this on a weekly basis, and we believe that the race is going to be much closer than the polls suggest. The polls are suggesting a Democratic sweep, right? But the polls suggested a Democratic sweep as well when Hillary Clinton was leading in the polls in 2016. So even though Joe Biden has a remarkable, advanced and stable, I forgot a word here in the PowerPoint presentation, an advance in polls, Hillary Clinton had also a remarkable lead in polls in 2016. So maybe that doesn't say much about the polls. Don't say much, even though they're pretending now that there was a glitch 4 years ago and they fixed the glitch. But the same swing states, again, sorry for the typo, the same swing states will decide the outcome, we believe. And the swing states are Pennsylvania, North Carolina, Florida, Michigan, and Wisconsin. These states usually decide who the winner is. Some states are traditionally Democrat, and some states are, like Texas, for example, traditionally Republican. Texas, by the way, all this fuss about mail-in voting. early mail-in voting, and that's what Donald Trump is contesting a lot and disputing and saying that this is like this favors. It's an environment that will favor fraud, right? Because people are sending their votes through the mail instead of going in person and casting a ballot. And so he's saying, and I quote, that's one of his tweets: the most inaccurate and fraudulent election in history. So because of mail-in voting, and Texas, one of the states that did not allow mail-in voting, but still had a record turnout recently in voting, in-person voting early, because of course many states, because of COVID-19, are allowing people to go vote early so that not everybody goes at the same time on the same day. Okay, so as I said, the worst outcome in my opinion is if there is delayed or disputed results, delayed even, like if Trump loses and takes time to acknowledge that he lost, even a couple of days are going to be bad for the market. But there are some instruments that I think at least, I can't really advise people what to do or what to buy, what to sell, but I can at least say what I'm doing. And I've been building a gold position for quite some time now to hedge against, uncertain markets and the risks of inflation, but at the same time to hedge against the volatility, because whenever there is a lot of volatility, historically, investors also tend to buy safe haven assets. And I noticed that looking at previous elections and previous important events, whether they're elections or not, and gold has tendency to soar whenever volatility goes up. Okay, so does Trump still have a chance? Okay, so we said that the Democrats are sweeping in the polls, right? So Biden is sweeping in the polls, or the states, Democratic states, because we all know that in the US, the people don't really vote for the president, but they vote for the states, then they vote for the counties and the states, and then the counts are done in favor of one of both parties, one of the two traditionally parties in the US. I don't think there are a few parties, but these are traditionally the parties that always lead either in the Oval Office or the opposition. And Trump enjoys a positive net approval of 4% on handling the economy. Okay, so economically speaking, what he did with China, everybody approves. Well, the majority of Americans approve and think that he did it for the good of his own country, right? Whether we like it or not, we cannot pretend that the economy, disregarding COVID-19, would have not been better under his terms, right? Like, yes, COVID-19 added a lot of, actually added the most unemployment in history of the US after the Great Depression, so after the 1930s. However, still the stock market is going up, and that's one of the things, as I said before, that Trump keeps bragging about. So yes, he has a positive net approval on handling the economy. In 2016, 60% of voters were in top half of income distribution. So there is a myth, there is something that people think which is wrong, and they think that the people who voted for Trump are the nationalists, older, poor people, or countryside people, and it's wrong. 60% of voters were in the top half of the income distribution. And what did Joe Biden promise in his campaign? He promised to increase taxes over $400K, so annually to 62%. So whatever. The household that is making over 62%, the household that is making over $400K in annual income will get taxed 62%. That's very high for American standards. He's also saying that he will increase corporate tax. So will the rich vote for Biden after all that? I even read this morning that 50 Cent, the rapper, tweeted that he's going to vote for Trump because he doesn't want to become 20 Cent. So a lot of people that are typically, maybe we would think they are Democrats or would vote for Joe Biden, are actually not voting for Joe Biden because of his tax increases plans. Okay, so Republicans, they tend to vote in person on election day traditionally, and of course with Trump calling for Republicans not to use mail-in ballots because he believes it's the fraud is going to be increased and vulnerable to fraud. And so Republicans will vote in person on election day. So that might also change the outcome of the election. So a few days before, and even on November 3rd, on Tuesday, November 3rd, a lot of Republicans, I believe, will vote for Trump. So I personally think that Trump has a tremendous chance. Looking back at 2016, when everybody thought he was going to lose very early in the polls, and things happening again, he enjoyed the very high approval back then with the rich or with the upper class or the higher income households, and he still does. And Republicans tend to vote at the last day and during the last days in person, and I'm sure they're going to appear in mass. Okay, so the various outcome scenarios. Scenario 1, and this is very important. This slide is extremely important because for the markets, because it doesn't really matter if Trump wins or Biden wins, and they don't keep their party doesn't retain either the Senate or the Congress, right? Because then if Trump wins, and we will look at the scenarios now, but let's say one of them wins, but the other party has control over the Senate, then they won't let any of the bills pass, right? So it will be extremely hard for example, maybe Biden to make his increases in taxes happen. Okay, so scenario 1, if Trump wins, Republicans hold the Senate, so they hold the Senate. The Democrats remain in control of the House. Then major indices will likely rally 5 to 10%. Why? Because the market initially jumped after Trump first won the 2016 election. Okay, so he pushed through corporate tax cuts, relaxed business regulations. Wall Street expects the pro-business environment to continue under a potential second term for Trump. But tensions with China and the coronavirus pandemic could continue to pose challenges for the market. So in scenario ones, if Trump wins and the Republicans retain Senate and the Democrats retain the Congress, it will still be challenging for Trump because of China and because of the coronavirus pandemic. Okay, sorry about that. The guys are leaving the office now. So, all right. So scenario 2. If Biden wins, Democrats take control of the Senate and retain the House. We may see more of the Democratic policy changes enacted, which include Biden's, first of all, promises to raise taxes, which would further strain on the value of the US dollar. So if Biden wins, and the polls suggesting a sweep, right? And that's probably why the dollar is under pressure today and yesterday. And the dollar index, I believe, is now below 92. So that's like a very, very, very big plunge. I'm just looking at a few things. Yes, well, the British pound is now at 31.40, but it reached 31.70. Right, this morning it was like last night it was still at 29.80. So that's like a 200 pip move from top to bottom in one day, in 24 hours. Okay, so the dollar is really, really, not performing well in comparison to other currency pairs. For example, the euro as well reached resistance at 1870 and now correcting a little bit. The high was 1879. So That's also a big move up from 117.60. Okay, so the dollar is going lower, probably because the polls are pricing in a Democratic sweep, which is the Democratic sweep, which is scenario 2. So Biden wins, the Democrats take Senate, and they retain the Congress because now the Democrats have majority in the Congress. So we may see more of the changes that Biden wants, the higher taxes, etc. Would that be positive for gold? I think it would be positive for gold because, as we mentioned, the dollar will be much weaker. I would predict that the dollar will even drop much lower than now. What about the market, the stock market? Stock indices will likely see an initial sell-off, I think, of maybe, we can't really say how much, it could be 10%. What I would do is I would position my self with a lot of percentage of my portfolio in cash to take advantage of these drops, because I think whoever wins, the volatility is going to make the markets drop, and the uncertainty is going to make the markets drop, whether it's a little or a lot. If the outcome is disputed, we will be ready to buy indices, or buy gold, or buy the dollar, or buy even single stocks at very good prices, right? So we would also expect, as I said, the stock indices to initially sell off if the Democrats sweep. But it is important to note that in the past 22 years, whenever Democrats controlled the presidency, or the presidential office, and the legislative branches, which are the Senate and the Congress, the stock market rose an average of 10%. So we expect a sell-off initially because of all the uncertainty, but then eventually, it will rally back as these things are positive for especially unemployment, because more taxes means more opportunities in investing in infrastructure. So I think also, while Biden is calling to invest in infrastructure such as renewable energy, so renewable energy stocks might rally. Energy sectors, the oil probably will drop because these are inversely correlated, right? Scenario 3, Biden win. However, the Republicans retain the Senate and the Democrats retain the Congress. So the Republicans who are now in in Senate will retain, and the Democrats retain the Congress. So everything stays the same in terms of legislative branches. However, Biden wins the presidency. That's scenario 3. And this could be bad news for stock indices and stocks, because it will likely mean that, gridlock. It's called gridlock. And gridlock is when someone has bills to pass and cannot pass them because the other party has control of the Senate. So the Republicans, it will be difficult for them to, with regards to the new stimulus, for example, at a time where more money is needed, more than ever money is needed, in the economy. So everybody's waiting for this stimulus to happen, and everybody's waiting for it if it doesn't happen pre-election. Now, Nancy Pelosi yesterday said that she is promising, or she has promising, in the negotiations are promising, and they might reach an agreement before the weekend. So let's see if this is, but they've been saying that for quite some time, right? This is like a game of cards that they're playing. Actually, that's why we call this series a Game of Thrones, Game of the Throne. So similar to Game of Thrones. But yes, so this is a possibility. Okay, and in this possibility, because the U.S. economy and financial markets rely a lot, as I said, on the stimulus, the risks of a double dip recession, the risk of a double dip would be very high. So scenario 3, Biden wins, but the Republicans keep everything else. Scenario 3, Biden wins, but the Republicans retain the Senate. The Democrats retain the Congress. The double dip scenario is high. Initially bad for stocks, also more likely to reduce the demand for gold as well. Okay, and finally, scenario 4, the one we mentioned earlier today, is the worst scenario, because no concession speech, let's say, or contested. We don't know how long it will take. It took 5 weeks when Al Gore in year 2000, and the market plunged. So this could take even longer. A recount. The Supreme Court might get involved. Actually, the Supreme Court got involved in year 2000, 5 weeks later. But at least back then, Al Gore gave his concession speech. So challenge results, concession speech, the market, I think, would plunge over 20% because we're already, we rallied significantly high considering all the, considering it's the worst recession after the Great Depression, and it's employment is at its highest levels ever. People are in lockdown. We don't know when this thing's going to be over. Pharmaceutical companies or governments are saying that this could last. The World Health Organization also, that it could last until next summer, June 2021, before the vaccine is distributed in the United States and elsewhere. And so a double dip scenario would be extremely high, but also a big crash, I would believe, in stocks prices and gold prices as well, because when people panic, and this is a panic situation, right? When people panic, just like they panicked in March and in April, there's no discrimination. They just sell everything and they just want out, right? Everybody's running to the exits and there's only one door. So that's the worst scenario, guys. All right. So anything else to add, or if you guys have any questions? So does that mean that the elections will make the market fair for a long time? What do you mean by the market fair? You don't think stocks are priced fairly now, reasonably fair? Don't forget the on the long run, what drives stock prices are at the end of the day earnings, right? And believe it or not, companies have been banks, tech companies, energy companies, even though oil is at the lowest ever, they're still faring pretty good considering we're in a recession. The only thing that's bad is the unemployment and some sectors within the US and the world. And these sectors, other sectors, of course, in French we say le malheur des uns fait le bonheur des autres. So other sectors are faring much better because of what's going on. For example, like the data storage sector, or app, educational app companies such as Zoom and Teams, Microsoft's Teams, etc. So at the end of the day, earnings will drive stock markets higher, and as long as corporate earnings are, powerful, better, above the expectations, the stock market is, some stocks are fairly priced. However, I would think that because of this volatility that will be caused by the elections, there's going to be a lot of opportunities, a lot of short-term opportunities and long-term opportunities. If you're asking about the long-term, Jonah, yes, the elections will give us a lot of opportunities to position ourselves in order to profit from this volatility and from all the uncertainty, whether it's for the short term or the long term. Okay, that's it. So how should we invest now? Like, how should we position ourselves now? We'll see this in the next webinar on Thursday, October 29th at 6:30. So it's not at 6, at 6:30. As I said, I'm traveling tomorrow. I'm also traveling on Tuesday, so I'll be available back in the office on Thursday, October 29th, and I'll do the second episode of this series. If there's no, all right, there's a few questions, I'll answer them, and that's it for today, guys. Question. Yes, maybe impossible that Trump wins the election. Maybe it's possible. We don't know, right? We try to predict the outcome, but unfortunately, the polls are not always right, and we will see. We will see as we approach. Of course, also mail-in voting has shattered records. There has never been in the history of the U.S. so much mail-in voting because, of course, people are don't want to go outside to vote, and because of the coronavirus. But does that mean anything? Does that mean that most of these, even though traditionally democratic states are more using mail-in voting, does that mean that the Democrats have more votes? We'll see. Betfair UK, Biden win 8-15, Trump 6-4. I think this is a possible scenario. I think this is a possible scenario. I'll look at it more tonight, maybe, but I think yes, it is possible, John. And you're with Mike. Okay. All right. So we'll see. If you want, we can maybe, because this is a game, so we can. Well, it's not a game, but it's called Game of Thrones. So we can maybe place some bets. So whenever any one of you comes to Limassol, I haven't made my decision yet, but let's say next Thursday, whenever any one of you come to Limassol, I'll invite you for lunch, or the loser will invite the winner for lunch. Okay. So we'll place bets then. Everybody likes to place bets right here. If you're here, it's because of investing opportunities. And so who doesn't like to win? That's it, guys. Have a nice day. Have a nice weekend. I won't be seeing you for the next few days. So see you next week.